Good morning, ladies and gentlemen. Before moving forward, I want to confirm if everybody's able to clearly hear me. Excellent. Okay, so I want to welcome everybody to FXTM's Week Ahead, market themes to watch out for. Let me reintroduce myself. My name is Lukman. I'm the research analyst for FXTM. So what I do on a day-to-day basis is simply analyze the markets using technical and fundamental views. So what I hope for us to achieve in the FXTM week ahead is for everyone to have a clear view on what to expect in the week ahead, market themes to look out for, and technical and fundamental trading setups. So what we are going to discuss today, so as I said, we're going to have a quick review of the markets last week. I feel it's very important we all know what happened last week in order to have an idea of what could happen in a new week ahead. We're going to look at key themes to look out for this week. We're going to have a breakdown of the economic calendar because that's very important when looking at technical and fundamental trading setups. Finally, we're going to discuss the various technical and fundamental trading analysis that I've been looking ahead this week and the week beforehand. And finally, we're going to have a Q&A session for anybody who has any questions. So, a review of the markets last week. I believe a very important theme that happened was how the dollar jumped to levels not seen since the Brexit vote. The sterling was boosted by reports of Spain and Netherlands willing to reach a soft Brexit deal. So even though the sterling has traded to such elevated levels, I believe the two key drivers are number one, dollar weakness, and number two, market optimism over a potential soft Brexit. The other big key thing that happened last week was the dollar sliding to 3-year lows. So the dollar certainly had a very painful year. The combination of heightened political uncertainty in the United States, low inflation concerns, and market expectations of a major central banks joining the Federal Reserve's gradually tightening monetary policy have all weighed heavily on the dollar. The Bitcoin crashed below 10,000 interestingly last week. The reason why we saw the Bitcoin under extreme selling pressure was simply because South Korea markets were quite concerned with South Korea potentially banning cryptocurrency trading. At the same time, a renewed crackdown on Bitcoin in China also soured investor appetite for the cryptocurrency. With Warren Buffett also saying that cryptocurrencies will come to a bad end, this created jitters across the board. Hence, we saw why the Bitcoin crashed to levels not seen since early December, below 10,000. The Bank of Canada raised interest rates by 25 basis points as expected. We discussed this in last week's Week Ahead. The fact that the Bank of Canada has actually moved forward with raising interest rates, this is likely to fuel market discussions of the era of easy money coming to an end. Finally, the US government shutdown on Friday. This was quite interesting because the US government shutdown after US Congress failed to arrive at a short-term budget deal. Normally, when such a situation happens, we have risk aversion, we have stock markets crashing, we have a demand for safe haven assets such as gold and yen increasing. But interestingly, it seems the financial markets offered a fairly muted response to the US government shutdown. So the key themes for us to look out in the week ahead. I still believe that dollar weakness is likely to remain our current theme, based on a political risk in Washington. Right now, the main driver behind the dollar weakness is the U.S. government shutdown, and likely with the uncertainty is likely to dent investor risk appetite for the currency. The euro could find support from a hawkish ECB meeting. So a few weeks ago, we had the hawkish ECB minutes, which showed that policymakers displayed optimism over the health of the European economy. What I'm looking for this week with the ECB minutes and ECB meeting is, even though markets widely expect that the central bank to leave monetary policy unchanged, we're likely to see that the improving economic conditions in Europe should probably push the ECB to hint to ending quantitative easing this year, and such ultimately is going to boost buying sentiment towards the euro. I'm going to look at crude oil. I think crude oil is another key theme to look at this week. The story around crude oil's impressive appreciation have been supply disruptions and ongoing optimism over OPEC's production cuts, potentially stabilizing markets. While I still believe that, further upside may be witnessed in the short term, rising production from US shale still remains a big threat to higher oil prices. And based on this could impact the technical and fundamental outlook for WTI crude. Finally, cryptocurrencies. Cryptocurrencies are still going to be in the spotlight. We saw last week how cryptocurrencies, Bitcoin, Ethereum, Litecoin, Ripple, they were all under extreme selling pressure. Although they were able to recover last week, I think much attention should be looked at if there's any new rules or regulations, because if any new news of regulations come out, this is likely to uh, diminish appetite for cryptocurrencies. Hence, we may see further downside. I've been receiving comments that the audio is bad. I want to reconfirm if everybody can hear me clearly. Okay, perfect. Thank you. So before moving forward, I want to ask if everybody's okay with the market themes that we've discussed. So in a nutshell, what we are looking for this week is further dollar weakness based on the political uncertainty in Washington. We're looking for the euro to potentially appreciate further thanks to a hawkish ECB minutes. And the reason we're hawkish, the reason we believe that the ECB meeting is going to be hawkish is simply because of, number one, the economic conditions in Europe continue to improve. So if the European Central Bank hint that the quantitative easing could be finished before the end of the year, this is likely to stimulate buying sentiment towards the euro, hence fueling the upside. On WTI crude, even though WTI crude is undeniably bullish, technically, fundamentally, US shale still remains a threat to higher oil prices. And finally, looking at cryptocurrencies were under immense selling pressure last week. If any news of regulations come out this week, this is likely to punish appetite towards cryptocurrencies, and we could see further downside on Bitcoins, Ethereum, Litecoin, and Ripple. So let's take a look at the economic calendar this week. This is going to be another action-packed week. On Monday, we have the Eurogroup meetings, ECB President Mario Draghi, and of course the executive board member Bernard Kouer will be participant in the Eurogroup meeting today. It will be very interesting because if Draghi does express any hints or his thoughts on the European economy, this is likely to impact the euro. On Tuesday, we have the Bank of Japan policy meeting and press conference. Markets expect that the central bank to leave monetary policy unchanged. On Wednesday, we have the all-important average earnings in the United Kingdom. So market expectations are average earnings to increase by 2.5% over the 3-month period. Even though the prediction may come in line with expectations, it must be kept in mind that inflation in the United Kingdom still remains at elevated level at 3.1%, and average earnings are still struggling to keep up with inflation, and such is likely to squeeze household consumption. Ultimately, this may fuel concerns over the longevity of the UK's economy, consumers-driven economic growth, and such is likely to fuel the downside in the British pound. So we'll be looking at this quite closely. About 3:30 p.m., we have the crude oil inventories. As I said earlier, the story around crude oil has been optimism over OPEC supply cuts, rebalancing markets, and supply side disruptions. If we have a situation where crude oil inventories show a draw, this is likely to support the upside. Alternatively, though, if the crude oil inventories are rising again, this may spark oversupply concerns, hence bringing oil prices lower. At 9:45 p.m., we have the CPI for the New Zealand dollar inflation. Naturally, if inflation does exceed market expectations, this could give the New Zealand dollar a boost. On Thursday, as we said earlier, we have the ECB minutes, ECB minimum bid rate, and ECB press conference. Although market expectations are that the European Central Bank will leave rates unchanged, I believe much attention will be directed towards the meeting and Draghi's tone. If Draghi is hawkish, if Draghi continues to express optimism over the health of the European economy, and hints that quantitative easing could end by the end of 2018, such is likely to push the euro higher. On Friday, we have a UK GDP for the final quarter, which is expected to come in at 0.4%. We have inflation in Canada, advanced GDP also in the United States, and finally, BOE Carney and Carudo are due to participate in a panel discussion titled Global Economic Outlook at the World Economic Forum in Davos. So, out of every day this week, Wednesday, Thursday, and Friday could be the real shakers. Wednesday, because of average earnings. If average earnings fail to meet market expectations, such as likely to pressure the sterling. On Thursday, if Draghi is hawkish, such should push the euro higher. Alternatively, if we do get a downside surprise and the Draghi is quite cautious more than expected, such could pressure the euro. And of course, Friday, if GDP in the United Kingdom and the United States both exceed market expectations, I believe stock markets could find support because we could have increased optimism of the health of the global economy. Alternatively, though, if UK GDP fails to meet market expectations, same with the dollar, we can see further selling pressure on the dollar and the pound. So, is everybody happy with our discussions on the economic calendar? Are there any questions before we discuss the fundamental trading setups I'm looking for this week and this month? Excellent. Okay, so with the pound US dollar is likely to remain vulnerable to political risk and soft economic fundamentals. So although the pound dollar, as we're speaking right now, is trading at levels not seen since the Brexit vote in 2016, I believe everyone should keep in mind that the driver behind the pound US dollar's upside is dollar weakness and market optimism of a soft Brexit scenario. Political risk at home and soft economic fundamentals have the ability to limit the upside on the pound US dollar. Looking at the euro dollar, I remain fundamentally bullish on the euro dollar. The euro buying sentiment remains firm on the euro based on the European Central Bank's hawkish tone and market expectations of QE potentially ending by the end of 2018. The dollar remains bearish because of political risk in the United States and low inflation concerns. Looking at gold, gold is likely to remain supported by dollar weakness. And finally, the Australian dollar should continue challenging the zero point 0.8 resistance level. Let me share my charts. So, here are the fundamental setups. Before moving forward, I'm receiving messages from participants, everyone saying that they cannot hear my audio. Could everybody hear me clearly? Okay, great. I'll move forward. So looking at the dollar index on the weekly charts, we can actually see that the dollar index is heavily bearish right now. Last week we saw prices trade towards the 90 support level. I'm looking for a weekly breakdown and weekly close below the 90 level for the next major level of interest on the dollar index at 88. Last week we spoke about the euro dollar on the monthly. We're speaking about it again here. So based on what I said earlier, the euro dollar on the monthly is fundamentally bullish. We can actually see the impacts of ongoing euro strength and dollar weakness. A monthly close above the 1220 resistance level is likely to pave a way towards the 12440 level before the end of Q1. The pound US dollar here is very interesting. So we have a situation where dollar weakness and optimism of a soft Brexit have elevated the pound US dollar to levels not seen since the Brexit vote in June 2016. Taking a look closer, we can see a monthly close above the important 1.3850 resistance level has the ability to send the pound US dollar towards the 14230 level. If this will happen, we'll see, but it may be based on persistent dollar weakness. If data in the United Kingdom continues to fail to meet market expectations, and we have a situation where the soft Brexit, the optimism of a soft Brexit starts to diminish, and fears over Brexit start to heighten due to complication in the negotiation process, the pound US dollar could easily find itself exposed to downside risks. Taking a look at the dollar yen, I believe the dollar yen on the monthly remains dictated by the dollar's performance. And we know the dollar's performance is weak. The dollar's been under pressure. So for those who want to look at the dollar yen on the monthly charts, I'm looking for a monthly close below 1.10, could open up after 1.08. Now the question is, where would the dollar yen trade below 108? The next level of interest I'm actually looking at could be around the 1048, 105 level. Now, fundamentally taking a look at gold, we can see that gold is respecting. We can see that gold is respecting a bullish weekly channel on a weekly time frame, and it's all about the important 1,340 resistance level. Last week, prices fell to close above this level. I'm looking for a weekly close above 1,340 for a further incline towards 1,360. And finally, the Australian US dollar on the monthly. As I said, right now, the Australian US dollar is challenging the 0.80 solid resistance level. A monthly close above this solid resistance could encourage a further incline towards 83. What I find interesting about the Australian US dollar is it's a clash because fundamentally the fundamentals of the Australian economy are quite bearish. Hence, we should see a weakening Aussie. but the driver seems to be dollar weakness. So as long as dollar weakness persists, we can see the Australian US dollar continue to move further to the upside. Now, for those who want to look at the euro dollar on the weekly charts, it's the same picture. The euro dollar is respecting a weekly bullish channel. It's all about the important 1.220 level on the weekly. Last week, if I zoom closer, we could actually see that prices tested the 12320 level we spoke about in last week's webinar, and it was a strong rejection. So this has opened a path to a potential further downside if we see a decline back below the 1220 level. So when we're looking at the euro dollar on the weekly, even though we're bullish, it's also good to play the range. So as long as the euro dollar can keep above the 1220 level, of course, interestingly, the next level of interest will be 12320. Alternatively, though, if we have a situation on 122, prices break below 122, we're looking at 1209 followed by 120. But as we've discussed earlier, with the euro dollar, we're fundamentally bullish, and we're expecting the European Central Bank to have a hawkish meeting this week, and such should push the euro dollar higher. So we're looking at 1232 by the end of this week. For those who want to play with the pound US dollar on the daily time frame, the daily time frame, regardless of the fundamentals, is undeniably bullish. You know, they've been consistently higher highs and higher lows. The MACD is trading to the upside, and if we asked to load the moving average, the 50 moving average, prices are trading comfortably above the 50. Let me load the 20 moving average as well. So you could comfortably say that the pound US dollar does fulfill the prerequisites of a bullish trend on the daily charts. Looking closer now, it's all about how prices react above the 13850 level this week. We can actually see that there's been a minor resistance around the 13940 level. So if we can actually have a daily close above the 13940, the pound US dollar is likely to trade towards 1.400. Alternatively, though, a breakdown followed by sustained weakness below 13850 could open a path towards 1377 followed by 137. For those who want to look at the dollar yen on the daily, I had a question for Miriam about head and shoulders on the daily time frame on the dollar yen. Yes, we can actually see a certain head and shoulders formation on the daily on the dollar yen. It has been in a messy range for an extended period, and looking closer, we can actually see that if the dollar yen could keep below the 110.75 level, the next level of interest will be 110. But as I said earlier, the dollar yen seems to be dictated by the dollar's performance. So if we have persistent dollar weakness, 110 could be on the cards by the end of this week. And finally, looking at crude oil. So with crude oil is it bullish on the daily charts? What's driving crude oil is not only dollar weakness, but market optimism over OPEC supply cuts, stabilizing markets eventually. Last week, though, we did see early signs of exhaustion. As you can see, this is the candle last week. Prices tried to hit new multi-year highs, but in the end closed in the red. I'm looking at to see how prices react above the 62 level. If we do experience a breakdown below 62, of course, the next level of interest will be the psychological 60 level. But if bulls do come back into the arena this week, following the crude oil inventories report midweek, we can see the WTI crude venture higher towards 64, 65, and 67.50 respectively. But at such elevated levels, one does have to question when about US shale production, because as said earlier, the major threat to higher oil prices is rising production from US shale. So now we've covered the fundamental and technical setups. Does anybody have any questions? Okay, we have a question about gold on a daily time frame. So, all I'm looking for gold this week in a daily time frame. Gold is bullish. All the lagging indicators do point to further upside. As I said, the MACD has crossed to the upside. Prices are comfortably above the 50 moving average, and of course, we're also below the 20 moving average as well. So we can say we're comfortably bullish on gold on a daily. The levels I'm looking for this week, though, would be if we could experience a breakout above 1,340. If 1,340 acts as a strong resistance level and we experience downside, I want to see how gold reacts to the new higher low at 1325. 1325. As long as the 1325 level holds, gold continues to fulfill the requirements of a bullish trend on a daily. But if we do experience sustained weakness below 1325, gold is likely to trade to the next level of interest based at 1310, followed by 1300. Oh, we have another question from James about the euro dollar on the daily charts. Okay, so I think we've discussed this on the monthly, but on a daily, it's a similar picture. So daily, the euro dollar, of course, is bullish. Last week, bulls did display early signs of cooling, but what bulls may be banking on this week may be a hawkish ECB meeting. The levels of interest on the euro dollar daily, of course, is 122, 1232, and 1209. So as long as the euro dollar can keep above the 122 level this week, the next level of interest will be 1232. If we have a situation where we have a breakout above the 1232 level, the euro dollar has the ability to trade towards 124 followed by 12440. Okay, guys, so I want to thank you all for your time today, for joining the FXTM's Lukman Weeks Ahead webinar. For those who have any more questions or who missed parts of the webinar, you can watch the post-recorded version later, which will be released today. Please also be free to download the FXTM app for more live market reports from our market analysts. And also be free to watch the FXTM's market updates on Tuesdays and Thursdays for more reports on the markets. So I want to thank you all again, and I'll see you all next week. Bye.